But we start with that big J&J news and the announcement that that company is going to be separating its consumer business from the rest. So what is this going to look like? The remaining business, the pharmaceutical and medical devices business, is a much larger business, about $77 billion estimated in annual revenue for this year 2021. The consumer business, about $15 billion in revenue. That consumer health business, though, includes a lot of very, very well-known brands, Band-Aids, Tylenol, Listerine, Neutrogena, Aveeno, for example. Alex Gorsky, who was already stepping aside as CEO, going to remain executive chairman of Johnson&Johnson, and Joaquin Duato is going to still become the CEO of that legacy J&J as of the beginning of January. And by the way, this is going to take a while to get done. It's going to not be completed for another 18 to 24 months. We don't yet know who is going to be running the consumer business. We just have a little bit more clarity on the legacy Johnson&Johnson business. Brian Sozzi, this seems to be the week for breakups. We heard Toshiba is going to be doing that as well, although obviously industrials, very different animal from pharmaceuticals. J&J, I feel like, though, has sort of flirted with this for a long time.
Yeah, this is what you will tend to see, Julie, when we have markets where they are now seemingly touching new highs every day, and we still have those rock bottom interest rates. But I do want to break it down from this perspective here. If you are a J&J shareholder, you're waking up this morning, probably read a Yahoo Finance news alert right to your phone, and you're wondering, hey, I've owned J&J shares for the past 25, 30 years. I know this company for its stability. I know it for its dividend. I know what I'm getting for it. And this is a big punch to your face here. And this is not something you woke up thinking about or even thought was going to happen yesterday evening. But what you would do now is this. I think you just have to sit tight on a stock like J&J here because you have a very compelling business here in that consumer products business. This is not like an IBM Kyndryl business here. Kyndryl was struggling. That business was split off last week. IBM was struggling. You have a business, as our Anjali Kamani pointed out, she was on that J&J call this morning. You have a consumer products business that is number one in many categories: Neutrogena, Tylenol, Aveeno. These are category-leading products that do have pricing power in the market. And then, at the same time, you have a pharma business that is pumping out COVID-19 vaccines. So really, over the next 18 months, as they try to separate this business here, you could see two businesses really operating at the top of their game. You could see a very motivated management team trying to improve the profit profiles of both businesses ahead of the split. And to me, that sounds like a stock you would sit tight on.
Well, Brian, to your point, though, we should point out that the consumer products business has been growing considerably less quickly than the pharmaceutical business over the past couple of years now. I mean, just taking a look at how the consumer unit sales had performed in the most recent full fiscal year, those up just 1.1% last year to, as Julie was mentioning, $15 billion, while we saw pharmaceutical sales up a much more significant 8% compared to 3.6% the prior year. So it's clear here that pharmaceuticals, J&J, of course, is going to remain Johnson&Johnson on the pharmaceutical side, and they are making a bet on this faster growing, if still albeit riskier, pharmaceutical business here. And if we take a look at some other companies that have made similar moves in recent years, we have to remember that Merck, for example, in early 2020 had announced it was spinning off a part of its firm and sold its own older, slower growing consumer products business. That, of course, became Organon, which went public earlier this year as well. So I think it does echo what we've seen across other consumer products and pharmaceutical companies as well in terms of what Johnson&Johnson is doing in the structure of this breakup, guys.
Now, a couple more things to mention here. Sort of in the background of this spinoff is the idea that Johnson&Johnson is also going to separate itself from its Talc lawsuit liabilities by spinning that off into a unit, which will, I'm not sure the exact structure of that. And Gorsky was asked by the Wall Street Journal if that had to do with this move, and he said it did not. So that's just something to mention. Something else to mention, Johnson&Johnson has said that the dividend is going to remain intact, at least at the same level for the entire entity. So presumably that means the equivalent dividend of the combined parts will be the same even after they separate. The current dividend yield of about 2.6%. It did say at least. So I guess there is more room perhaps even for that dividend to go higher, Emily.
Absolutely, Julian. I think as we were talking about even earlier this week with the breakup of General Electric into three different separate companies here, I think this calls into question as we were talking about the conglomerate discount that's being applied, or that a lot of company executives seem to be thinking has been applied to their companies over the past several years here. And I know we're talking a lot about the pharmaceuticals and the consumer products with Johnson&Johnson today, but if we look back on the industrial conglomerates, just as one big example here, these stocks have been underperforming the market for years. And I know we have a chart of that data as well here, but I mean, General Electric over the past 5 years down more than 50%. Take a look at 3M, that's up just only about 3% here when you compare that to the broader market gain of more than 100% over the past 5 years. And I think that also speaks to what could potentially be this motivation here, is to unlock some of this value that a lot of these executives believe has been discounted by the market with some of these conglomerates, with a lot of different, perhaps unfocused businesses as they've continued to grow and have gotten so sprawling.
That is a great point. And by the way, that is also applicable to Johnson&Johnson. It has also lagged the market in terms of its performance, even though, again, not an industrial company, but that seems to be one of the stated motivations for this deal as well.